Okay, good afternoon, everyone. Welcome to our weekly highlights. And today I'll be sharing with you some of the highlights of this week. And before we start, I think usually I would just share those sector indices and FBM KLCI. Today I want to do it slightly different, the slightly different manner. We want to position ourselves using what we can see in the US front. Okay, so US is quite strong in a sense that people are buying into the 30 counters of Dow Jones. But if you look into the overall picture of the um, what we can see in this Dow Jones is just 30 counters that is up very strongly. But if you look into S&P 500, okay, S&P 500, it's actually not as strong. So it means that people are still afraid of the tech counters, and therefore people are not really buying in. And if you look into the Nasdaq index, it's even worse. It's actually below their range of recent highs. Okay, so with that in mind, we are likely to see further weakness in the tech counters due to the still heightened inflation rate, okay, inflationary pressure, and that will contribute to slowdown in demand in terms of gadgets and equipments, and that is what Federal Reserve wants. And if the CPI numbers continue to stay elevated, this will also contribute to high interest rate, upcycle, because right now people thinks that the Federal Reserve may actually turn from hawkish to dovish. But my view is still maintaining to say that right now we are still looking at the Federal Reserve maintaining this hawkishness tone, and that will contribute to further downside risk to a stock market. So this rebound on the Dow Jones could be seen as selling to strength later part of the day. So we are going to monitor on 2nd of November. What is Jerome Powell going to mention in the FOMC meeting, and that will contribute to potential direction change. Okay, I'm saying this because I think the direction should maintain in a lower position until the whole sector from across the conventional business until the tech counters are up again. Okay, so right now I'm still maintaining the view that technology counters will continue to stay weak, and therefore we are likely to see further downside risk towards overall market conditions in the US. Okay, so this is just some of the analysis on Wall Street. And on this Brent oil prices maintain above the 88, 89, 85 US dollar mark. We will continue to maintain this view as long as the Ukraine and Russia war is still ongoing. Okay, why is it so? Because when it spiked from this range 96 all the way up to 137, it is actually due to this in the Ukraine-Russia tension. So what I'm seeing right now here is that if the Ukraine-Russia tension is still not resolved, this will maintain its trend above the 84, 85 US dollar mark at least, until the end of the Ukraine-Russia war. So right now, if this is continuing its trend above 90 US dollar mark, I would say that this is a very interesting part. It may contribute to our stock selection of going forward, which we may put in more oil and gas counters because the oil prices is still not falling. Okay, so this is just something to ponder, and let's check CPO prices whether it's up or down. Based on the current position, yes, it's as of this current moment, it is actually up. Okay, so what is triggering this up move from this previous day, negative 3.8% down, today is actually plus 4.66% up. So if you look into this structure here, it is telling us that hey, CPO price has potential to head towards the 4002, 4005 zone. Okay, so that is the what price action is telling us. Initially, I thought that it should fall back towards at least 3008 before only recovering towards the 4001 or 4002. But if the price action is already reversing at this current point of time, there must be something that has been changing that caused this to continue higher. So if it is able to go above the 4002, 4005, we are looking into the plantation stocks again, because it has been quite detrimental, to see a fall from 7,200 to 3,200. So that is 4,000 slash is near towards 30-40% down. So in CPO price, if it is able to hold above this 4,000 level towards near towards the 4,002, I believe that plantation counters are back. If you check plantation index, let's see. Yes, today is up, so it's quite positive. I would say that this is a sort of a positive view back again on plantation counters, because we thought initially it should continue to at least retrace, but it did not, and CPO prices has been sustaining. I think it is time to relook again into a plantation index for the time being. Plantation stocks may capture the attention during the November reporting season month, because last year itself we have this uh, MCO period and a lot of closure. And this round, the base, okay, the low base from the earnings in last year, that will contribute to a growth this year, because this year itself, everything is resume as normal operation wise, and therefore plantation stocks may capture more earnings into November reporting season month. Okay, so that's what we are going to monitor right now. And okay, let's get back to our oops, sorry, technical issue. Yeah, okay. So let me present to you another screen of mine, talking about today's yeah market. I think our market itself is quite resilient. If you check against other um, other regional markets, it is quite uh, noticeable that our stock markets are quite resilient over the past week. And right now, although a lot of other benchmark indices are positive, like Nikkei and Korea, I think is up. India is up. Philippines is down. But generally speaking, last week we have been quite strong in terms of the relativity, which means that our stock market is up, the rest of the markets are down. But at the same time, if you look at today's market, it is up 1.6, 1.15%. It is also showing that people are anticipating things to be changing in Federal Reserve meeting, because this week a lot of interest rate decision will be made in Bank of England, in US Federal Reserve, in Malaysia as well. So what is causing this this market right now is definitely the event driven, whereby they are forecasting, they are likely to see further change of tone, because in the US GDP growth has been seen stronger, and CPI numbers is still there. Potentially they are looking at a potential shift in terms of the hawkish tone towards the dovish tone. But my view is that it is still maintaining hawkish tone for at least the rest of the year until next year March. Okay, so what I'm trying to say here is that this week itself, a lot of things are going up because of event driven, and I am anticipating that this might be overstretching, and we might be seeing some pullback in the near term. But overall, today's sentiment is very positive. Where is the very strong positive tone is technology stocks, plantation counters, healthcare, logistics. So these are some of the areas that you can actually trade on. I would also advise you to look at the energy sectors, because I think this is a down lagging part of the laggard that we can see more potential upside from this point. So basically, we have put in stocks related, towards all these sectors. Despite, we can say that midterm is still down, but we did put in something on technology stocks. We did put in something for healthcare. We did put in something for transportation and logistics. So we are quite right on today's path and today's prediction for the time being. So if you look into this at a glance, everything is positive. Only REITs are down. But if you think correctly, why is REITs going to come down? Because if we are going to continue to increase the interest rate from 2%, 2.25 to even 3% going forward for Bank Negara, then people will use that as a benchmark. Because if you're getting a fixed deposit rate of 3 to 4%, it's much better to get that fixed deposit rate, or even Malaysian government bonds, which is also at maybe 4%. Okay, if government bond is risk-free rate, why they want to put into REITs, which is actually an equity asset class. Okay, because equity asset class has risk of the share price fluctuations, and therefore even the dividends are at 6%, 5%, it is still not as good as the risk-free government bond yield. Okay, so if we are going to increase interest rate, which is a lot of people are saying that we are going to increase interest rate in this month for Bank Negara. Therefore, people are selling off the REITs at this current moment. So that is what I can think of, what I can assume out of this situation, that why is REITs being sold down right now. Okay, so just that is just my understanding. But overall, we can see that since the US side is more positive, and there is some rebound in the Nasdaq index. Therefore, has contributed to most of this upward cycle on today's chart, today's sectoral view. And we are also looking at several catalysts out there related to plantation, related to energy, related to healthcare. Okay, so that is just some of the things that we have to take note of recently. And bear in mind, this week itself, there are a lot of interest rate decision to be made. Hence, that may shift the stance of the market directions going forward. So just stay tuned on to what is going to happen, and we are going to monitor together. And next week we'll give you an update on the weekly highlights again. Okay. So let me share another view. Hold on a second. I need to change. Stop sharing. Present. Okay, this is our daily picks for today. Okay, so generally speaking, just now we have mentioned tech related. Although we are seeing that Federal Reserve will still maintain the hawkish tone, and therefore it should contribute to further selling into the technology stocks. But there is a rebound last week, and hence we have put in two counters under the technology stocks. Whether they have moved and trigger us, it did not, but at least it is going up. Okay, so which means that we have predicted correctly that stocks can move higher, but it did not trigger our stocks, the strategy that we have set earlier on, and therefore it didn't trigger. But again, we are looking at the whole view of the market to put in stocks for this sector. So Unison is one of them. It has went up from I think 229 onwards to 252, and it has went up to 262, 265 last last done price, and then we may anticipate further upside towards 282 as well. So overall, there is a breakout, and therefore continuation pattern should persist at least for the near term until 282. Okay, unless the I mean the movements right now, it seems like they want the Federal Reserve to turn around from hawkish to dovish. So let's see what's going to happen for the FOMC meeting. Okay, so for FPI, it is wait, let me check the share price. Is, yeah, updating. Okay, so it has been moving up just mildly, but I think this is also one of the consideration that it could be a positive breakout after two bar consolidation phase. This might be a breakout above 316, and next target may go up to 333. Sorry, 3 at 30 cents. So for FPI itself, it has turned more positive, and hence we might be looking at the 3 ring at 30 cents as the next target. So our we have put in these two as the technology stocks. It has been positive since the morning season, but let's monitor out throughout this week whether they can sustain until Federal Reserve and after Federal Reserve meeting. If not, then we have to use certain moving average to take profit, or we have to set our target profit once the Federal Reserve has came out with their statement. Okay, so just now we have mentioned also oil and gas, because oil prices has been sustaining quite well around 90 to 95 US dollar mark, and we think that should benefit the overall condition on oil and gas counters. So we have put in Dayang and also Pentec, and I think Dayang, yeah, it's pulling back after the recent rebound, but this is overall a good trend because it has break out above 120, which is the near-term high. It has also hit above the one-year high range, and you can see that this has been all this while just staying sideways along this range of 80 cents towards 1 ringgit zone, and this is finally breaking out and break out a one-year high, and this is definitely going to look quite interesting going forward. I think there could be opportunities to be made throughout this period until 1 ringgit and 40 cents level. Okay, so that is our target. Okay, target based on the projection of technical analysis point of view, and the next quarterly earnings should be more positive, and we are likely to see further upside. Okay, so for Dayang, I think you can still hold on to it. For Pentec, Pentec is also having a lot of times of earnings, surprises. Once the earnings surprises us, and you can see that the share price gap up straight away, and this is also part and parcel of their earlier movements throughout this period of time. There are a lot of earnings surprises, and during August and during August and sorry, July and also October, we have seen the results gap up movements, and certainly we are still looking uh, positive on Pentec itself, and they are under the oil and gas sector. So basically, what we are going to do here is try to see whether we can monitor for breakout above the 69 cents. Next target will be around the 71.5, and followed by 76.5. Cut-loss point is like 66.5 cents zone. So on oil and gas counter, we have put in two as well. And let's check out the medical sector. We have put in Hata, and we have also put in TMC Live. So Hata, I think it did not really trigger us anything, but it has went up slightly higher in the morning session before closing lower on intraday basis, and also this is on as compared to Friday itself, it is also down towards 2 ringgit and 11 cents. So if you take note on Hata, we have been mentioning since around 1 ringgit and 50, 1 ringgit and 60 zone, it has rallied quite significantly towards 2 ringgit and 20 cents. Perhaps this is time to take profit. and wait for the pullback, and then the recovery should be seen going forward, and that is when you have to participate again, perhaps around the 1 ringgit 88 cents level. We are not, we can just assume that we know what is happening in the stock market, but why the market is buying Hata up. It could be due to the Omicron new variant, COVID variant, or it could be also rotational play. But my guess is that it is more towards the rotational play, and therefore it is contributing to the upward cycle for this Hata or glove counters specifically. So next target, I would say that it could be around 244 or even 226. So that are the two range that we are going to monitor for some good opportunities of trade, and the cut loss point is around 1 ringgit 98 cents zone. So I think this will be the trading range for Harta Lega, but it did not trigger today for our stocks, our strategy, so it's fine. The other medical related counters we have put in is TMC Life. It has gap up from 61.5 cents to a 63.5 cents zone, and right now it's closing slightly lower on the intraday basis. But again, this is still very preliminary, and we are supposed to see some pullback before the upward surge. Okay, so if you take note on this counter here, it is having a lot of gaps. First is around 58.5, 59. Next is 61 to 61.5. So I could see this as an opportunity to wait for the pullback, and then a recovery back towards the 65, 66 cent zone. I think on the medical services segment, it is quite likely to see some good opportunities because earnings recovery will be there. As compared to during MCO, a lot of people postpone their surgeries, but right now, it seems like more and more people are willing to go in for their surgeries, be it urgent or not urgent kind of surgeries. I think as long as people want to treat, they would treat at this point of time as compared to during MCO, because during MCO it is very tough. You have to go in, you're afraid of COVID and things like that. So right now the COVID become a normal flu, and people are more aware that they're being safer in this environment as compared to last year, and therefore they will go in to do their surgeries. So this is one of the counter, TMC Life. You can also look at into Optimax or other medical services companies. Okay, so last sector is Harbor and also Swift. So Harbor is under our technical focus as well as our daily picks. It has breakout strongly from the 1 ringgit 13 cents to a close at 1 ringgit 17 cents. Volume is also picking up. I think people are also anticipating that results will be good, result will be decent. So the breakout happens at 1 ringgit 10 cents, and we should be aiming for 1 ringgit 22 towards 1 ringgit 26 cents zone for the time being. Okay, so this is Harbor, and I think shipping and logistics is still quite decent. I would say that more and more people are using, all this last mile delivery or whatever they are, getting back from buying from Taobao or wherever e-commerce, platform that wants to ship from China out, to Malaysia or wherever it is. I think the trend for e-commerce is going to be very matured very soon, because a lot of people are using it, and a lot of people are tapping along with that e-commerce wave. So Harbor is one of it, and the next one we did put in is Swift, and Swift is actually, if you check Swift, company out, it is actually hovering around the SMA 20, and today there is some opportunities to trade higher towards 49.5, but it closed at 48.5 cents right now. I would say that this could be an opportunity to accumulate, and this is what I like about this pattern. Always we look for breakout, pullback. This is rallying with good volume. It pulled back without significant volume, and then right now it's trying to pick up. Only half a day, it is almost at more than half of last Friday's price, and price action has been going up. So this could be taken as a flag formation breakout, or you can call it a pennant formation breakout, but definitely this is a consolidation phase, and this 48.5 cents breakout should be a legit one, and we should be monitoring for further upside towards at least 50.5, 52.5, and also 54 cents zone, with the cut loss point at 47 cents. Okay, so this will be some of the trading daily picks for you all. And before I go into the Q&A section, make sure you have your sharer badge in order to in order for us to review your stocks. Make sure you share this video out, and also click the like button, and then we will continue with the Q&A section. But before that, we are looking, if you don't have any stocks to trade throughout this period of time, you can also look at traders list, which we put in our previous 5 to 7 days counters, and this counter will be triggered as well at the same time as the daily picks. Just that daily picks is only for the day itself, but daily traders list is for the week itself. Okay, for the week, for the past 5 days, what is happening, and we have already put in those counters. So let's check one by one. SAM Engineering, it has been going up. I think last week it pulled back. I think today is up as well. Let's check it out. Up a little bit, yeah, 540. And Semiden is up as well today. There is some news on it talking about the ACE to main market listing. So Semiden is also on the way up, and quite interestingly, it is just hitting around this range of 81 cents and then pull back on the intraday perspective. But overall, you can see that this is a very significant sell down, but it has also accompanied by a rebound. So what I'm saying here is that there could be some good sideways move or pullback move towards the 76 cents before the upward surge. Then we might be targeting 90 cents or even 1 ringgit for a mid to long term position. So this is for Semiden. Timecom, it's also positive, I think. Telco sites, I think, is quite likely to be positive. It's just 1.3% down. I think it is also hitting some resistance along this 4.80 cents zone. So maybe we try to monitor for the pullback formation on Timecom before a good surge in the long run. But we did put this in under our fourth quarter, at least 3 months of trading opportunity, and this is still considered as good because we are likely to continue with the ongoing 5G implementation. So 5G implementation, the biggest beneficiary is TM and also Timecom, because their infrastructure, their backhaul services is one of the those standards that people use as a structure backbone for 5G connectivity. So that part, I think Timecom is leading, and also TM is monopoly. Okay, so yeah, we have 2 more minutes. I don't see any questions right now yet. I think perhaps you all have to share more to get the sharer badge, and make sure that you are having a sharer badge before I review the stocks. So far, I'm not seeing any sharer badge yet for now. Okay, so yeah, let's just check a few more stocks before we end the session at 1 p.m. if there is no questions. There is no questions that has share badge on top of your comment. So that is also what we are looking at right now. Okay, so Padini, yeah, Padini is a consumer related stock, consumer discretionary, and I think if we are looking at this Padini, it seems like it is a very stable stock. Despite the sell down phase, it still can recover back above the 3 ringgit zone. And I would say that trading range will be located around the 321 towards the 350 and 365. Okay, so I just saw one question comes in. Betamac. Okay, any opportunity to trade in Betamac? I think there is. If you just track, within the 30 minutes chart, it is telling you that it is forming a base along this level here. And if we check this Betamac, it's actually quite positively above the 60 cents level. Right now it's 60.5 cents. So if you take note on this very interesting chart pattern here, it is definitely considered as a flag formation breakout since this part of the day. it has gap up, pull back and sideways, and then a breakout on this bar is 1130 bar, and then move sideways without volume. So this is a very typical flag formation breakout. So very good spot at this point of time, and we are going to monitor for a breakout above the 61 cents zone. Support is at 59 cents, and that could hit target perhaps around 65.5. Okay, so that is a short-term target. Review on Tenco as well. Review on Tenco. I think for Tenco, if you change to daily chart, it has been turning quite well upwards, and right now today it has a breakout 35.5. It has pulled back towards 36 cents after hitting the range of 37.5. Overall trend is up. I think it can mimic what happened early on towards the 43 cents zone. But you have to try to make sure that it is able to support above the 33.5 cents. And today itself, it has formed a flag or sideways consolidation breakout above 35.5. So short-term trades will be around 38.42 and 44. 45 cent zone. Okay, so that is just an outlook for Tanco and Genotech. I think tech related counters or EV related counters are slightly higher, but it's not out of the woods yet. It is just forming some reversal pattern along this 2 ringgit zone towards 2 ringgit 20 cent zone. So we are going to monitor for a breakout, and if there's a good breakout, I think we can just aim for 240 first, and then around 253, and then the next target will be around the 2 ringgit and 66 cent zone. So these are the three levels that you have to take note, and cut loss point is around 2 ringgit and 2 cents level. Okay, so I'll go through last two counters. One is BJ Food, one is Fiamma. These are also under the consumer sector. I still like it, although it has been hitting twice around this range of 97 cents. But I believe there are more upside to it, and there are more upside to it in the once the earnings season is approaching, and we should be able to see further upside if the results is much better. But I still think that third quarter result is still not too bad, and it can be comparable with second quarter's result, and very likely to break out above 97.5, may hit around 108 towards 1 ring at 12 cents level. Okay, so this is the BJ Food, and last counter for this session is Fiamma. We will just review on this counter. Okay, moving sideways until today itself. It is considered as healthy because the recent part of the day it has turned from 80-90 cents zone towards 94 cents breakout, and pulling back is also near towards 98.5 and being supported. So next we are going to monitor for a 1 ringgit and 4 cents breakout, and next target will be set around the 1 ringgit 11 cents towards 1 ringgit 15 cents. So this is a more positive bias trade, and this is also an uptrend view on MACD MACD indicator. We're going to monitor for a breakout above the 104 level. Okay, so for Fiamma, I think it is part and parcel of this I think signature, right? If I'm not mistaken, signature, and likely this Fiamma could actually cross sell, the things in Signature Kitchen, one of the listed company, and we could actually anticipate further upside, for this to around 1 ringgit 11 cents and 1 ringgit 15 cents. Cut loss is around 98.5 cents zone. Okay, so that will be it for this session. Thank you so much for tuning in for webinar, and we'll see you again next week, and hopefully you can have a good trading day ahead. Thank you so much, and bye bye.